Thanks for the great Iron Condors course where you discuss strike selection and exits. Can you elaborate on entry strategy? You mentioned something about waiting for a reversal. So yes, the first thing that I can do is I can highlight the Iron Condor course. So thank you for that question. We basically have a course that I put together, a bunch of videos. There's another page here, but basically just going over Iron Condors, and everybody who signs up for VTS gets access to this. So again, you can claim your free trial and you can see it. So let me give you an example. What you're asking, you're wondering about why I mentioned that I wait for a reversal. So what you're getting at here, and I can give you an actual example. What I mean is when you're trading an Iron Condor, it will look something like this. We've got a live trade on now. We've actually got a couple. Standard Iron Condor looks like this. You want the price to stay somewhere in this middle range. Doesn't have to pin to the center, it can move around, but you don't want it to deviate too far in either direction. So when you're entering trades, you don't want to enter something on a strong trend, either up or down. So I can use both of these examples. But if this is trending really strongly upwards, you wouldn't want to open a new trade here, because if the market does reverse, sometimes those reversals are pretty strong the first couple of days. Like you can see there's a pretty big crash right there. So what you would do if you noticed that things were progressing upwards, right? Say, it's pretty obvious to see that this is an uptrend, right? What you would want to do is wait for a couple of days of weakness so that it gets back closer to a short-term, medium-term average, right? You don't want to open it here. You'd wait for this one, and this actually would have been probably a good day. The same thing would apply on the downside. If something is crashing, you don't want to follow it like right there. This is a trend that's pretty strong. Just wait for a day or two of weakness, or in this case, strength, and go ahead and open one there. It's a little bit closer to the average. Again, here, this would not have been a good day. And of course, looking forward, you never know if it's going to continue or not. The point is, it's not overly difficult to identify a strong trend. And then all you do is you just wait for maybe one day. You could have done it here. You could have done it here. Another one here. No problem. As long as you kind of pad your trade a little bit by those first couple of days. Essentially is what we're getting at. So our recent example, we opened a trade yesterday. Well, why would I do that? I'll show you exactly why I did that. This, again, is a strong trend. I would not have opened one here. I would have waited for this day or this day. And again, here, this is very recent action. It's not that difficult to see that in the last, say, 8 or 9 days before we've seen the weakness, I don't want to open a trade here. So I was waiting. Every day, I'm just waiting. Every day you log into your VTS email, no new trade, no new trade. I could have done one here, but the problem is when you combine that also with the fact that the next cycle had, at that time, 75 days, it was a little bit long. So I kind of wanted to wait a day or two. And so I opened one yesterday right here. And that is a little bit closer to the average. So if it does get that whipsaw, it's going to be insulated a little bit, right? You might get 2 or 3 extra % to work with. And again, with trading, no matter what you're doing, option trading, tactical investing, none of these things are really mind-blowing. They're not going to change your results radically. It's really just about building small edges over time and waiting for those little reversals. It just means that a higher percentage of your trades, you'll probably be able to hang in them for an extra couple of days. If you are in the habit of selling Iron Condors or buying calendars, 8 days into a really strong trend, you can get hit with one of those reversal days. And sometimes those are the strongest days. If it's going up, you can get a down 2 or 3 day. And that's already going to push you a little bit uncomfortable to the edges. If it's going down really strongly, as you know, one good announcement from the Fed or the government, it can bounce 3% the next day. You're going to get into a trade and you could get stopped out in 2 days. So just to avoid that, we do actually kind of wait for those little opportunities here and there. You don't have to wait for a full reversal, but like I said, just kind of up here, get in a trade somewhere around there. It's actually not that hard to identify.